All right, hey everybody, DayTraderRockStar here. Fast update video going into Wednesday, December 29th. Wednesday, December 29th. We got a nice show showing up here for tomorrow. Here tonight, I'm actually doing some trading. Added to my Duo today. Duo is a recent trade. It's a penny stock, high risk, speculative setup here. And it's come from above. The setup here is very interesting because after the close today we had, or at least all during the day actually, from yesterday, CPOP here pushing back up here, CPOP, a Chinese company, had a nice pop, and then after hours had a nice little run. Now this thing has come from $1.68 and stuff, and I didn't really tune into the news, but the fundamentals behind this stock are very similar to the Duo. Both Chinese stocks, both have cash per share. Actually, Duo has $1 and change, $1.20, I believe, $1.20 something. I'll take a look at that a little closer. Per share in cash. The floats are similar. The book value on is a little bit better on the Duo too. Actually, I want to show you where I'm looking at here. I'm going to my FinViz market map here. And I'm just showing you both. Actually, I was looking at the Duo just before. Let me move this over here and get everything lined up for us. I do these things on one take, you know. It's one take and I'm done. So bear with me. We should get rid of that ad. Can I get rid of that ad by clicking that? No. Something else comes up. Alright, we're just going to have to do that. Alright, so this is the one that popped today. CPOP. You see a big candle today. Well, huge move. Big move. We take a look at some of the fundamentals on this. Book value here, $1.08. Cash per share is 6 cents, which is not a lot, but the float here 17 and it's about 17.5 million shares. The float 1%, 1.25% short. No big deal on that. Just a nice move, a big move today. Up 35%. Now we're going to take a look at the DUO, and we have book value $1.75, cash per share $1.20, cash per share. That's a lot. That's really a lot. 60%. Well, actually, insider transaction. I was going to say institutions own insider transaction. Oh, that's institution or insiders own a lot of this share. I don't know where we're going to pick that up. Insiders own 10%. I thought it was a little bit more. Institution transactions, I guess it's positive on what's been 3-month change in institutional ownership. It's been very positive. 24 million shares float, but this one we're expecting to pop tomorrow. This is what we're looking at. Seeing the pre-market volume or the post-market volume. DUO already started to move in. Now I got in today at 52 cents. It didn't, kind of pulled back, and after hours it got back up to 52, closed at 54. Added to and I added another 1,000 shares. And I expect this to run in the morning. I think we get some follow through on the CPOP, CPOP, and I think it leads over to this one. This one ends up going. Now where does it go? The key here, that when these stocks pop, you know, when they do have these huge moves, lots of times it happens pre-market. And it'll pop from 4 o'clock on to like 8 o'clock, 9 o'clock. And when pre-market, you know, the open of the market, it's usually drifting back down. So if you're in it, and like I was in it, I was discussing today, you know, we got more of it. And I already started putting my orders in to sell. So I already have orders stacked here, 80 cents and $1.30. And how did I come to these numbers? Well, 80 cents would be, I'm actually 90 cents. I have it at 90 cents, which is kind of brings us back up to this resistance area. It gets us through the 20. You know, we don't know if it's going to really get there. And the $1.30 area too. I'm just saying that would be fantastic. We got that big candle. Who knows? This thing could go anywhere. Imagine it went to $3 or $4, and I'm holding some. So I think the key here is, because I'm not going to be in front of the computer at 4 o'clock in the morning, is to get your orders in. So put an order in. You know, a limit order, good to cancel. If you have pre-market if you have pre-market access to trading, because these are the things. This is when these things run. They run pre-market. So if it's going to go, I would, and it might go all day, and it might continue. You know, the valuation at this point actually might be good for a hold. But this is something we're going to be watching tomorrow. The other thing we just want to pay attention to is, yesterday we had a tremendous rally in the market, and then today it was kind of choppy overall. It was very choppy, actually. 9:30, we actually had a 5-minute divergence here. It was a nice 5-minute divergence. It popped up here, it came right back down, started another divergence, popped back up, and then this trend line started to form. And it kind of just kept on tagging that until we finally got through it, came back, broke back down through it, then got through it again, came back to it, chopped around, came back here. This was another nice. There was a nice divergence here, and the discussion here is how important it is to take these divergences. You got to take these divergences. You guys say, you know, John, this is not a divergence. It's lower low. I tried to explain a lot today on how to read divergences correctly based on volume and based on, you know, markets overshooting, especially when you shoot down here and you come to a level and you break through that level, but the next candle brings you back up, and then the rest of the candles start to hold that level. That one candle is probably just an overshoot and should be used to draw your trend lines and stuff, or gauge some of your, you know, divergences off of. That was just a flush, and then it popped back up and we started to hold that level. So we're going to look at that line being relative, our level, and then you can see it came back down to that line, and we held way off of that. So that I consider a good divergence, actually. And we've seen that a couple times, and that happens when you sell off quickly. Let's see what else here. We had a little move up. The market was really very choppy today. It to get a big pop and then to get a big drop. This was at the end of the day. But most of the day, you could see it's just choppy, not really doing much. Came right back down at the end of the day. Ended up pretty much flat. Maybe, I don't even know if we were up or down, really. Up or down 4 or 5 points, if that. Then after hours, we kind of got a little pop, and then we drifted, and then after hours now opened up. And this is the type of patterns you're going to be looking for after hours. You're just going to be looking for any type of pullback, and then that's where you're going to, and I've been seeing that the channel pullback to the 200 period moving average for the last 2 sessions. Last 2 sessions, I've been seeing this setup hold a lot. Any type of channel line down into the 200 seems to be holding, especially if there's a divergence. And there was a divergence right here. I should have pointed that out to you before, because I could spot a divergence like anything. But that was a nice one right here. That was at right after the close, at the open, right at the open basically. Pushed higher. The 6 o'clock open, overnight open. So look at that, divergence, big move up, divergence, big move up, and this is where we are right now. So, and we're going to continue to. I'm going to continue to shove this down your throat. That you have to take these trades. I'm there for you. I'm here. We're trying to identify them real time. It's a real good way of making some consistent money in the markets, as long as you don't get, you're just sticking to the criteria, and the criteria is very easy to follow. I actually am gonna be working on a video here, a new one, just to kind of, I tightened up the whole criteria and the methodology. I tightened it up even more, so it's very exact on everything that you need to just pay attention to get into these positions. I gotta find my where is it? Here it is. I don't know if this could, yeah, I call it, set of rules to follow. So all these things, the entry criteria, profit exit criteria, the automatic stop criteria, risk management for the trade, and how to increase your positions, how to set up your charts. And one thing here I didn't put down is how to get out of your trade, which I think is the most important thing, is how to get out of your trade. So I'm going to be working on more of that, but I added a few more slides to the thing here. And again, here's a standard divergence. I'm not going to go over that stuff, but what we're all going to go over, one more time, is the two stages of making a divergence. Stage 1 is a low, stage 2 is a lower low, plus the higher low, unless we're looking at that relative divergence or a double bottom divergence. These are two other divergences we like to look at. Very simple to identify. If they're on a trend line, or I mentioned just before on the 200 period moving average, it adds, you got to be in it. You just got to push the button. All right. But now to break it down even further, and like, all right, what do you mean if it's on the 200? Well, there's just a set of, back over here. We're looking at this chart, and here's your 200 period moving average. Here's your VWAP, and here's any type of identifiable channel. Here's a little tight channel. There's a tight channel going up here. You'll be able to spot those. And whenever you have those channels, that's where you're going to start looking for maybe possible reversals into channels, and then a new channel, and then everything tends to be channels. Now we're in a new channel. It could be a large channel, it could be a small channel, it could be a wedge pattern. But if we do have those setups, we have a pivot area here, maybe this starts to channel out here. Once we have those 3 pivots, 1, 2, 3, then we could, concentrate on the next trade down there. And if it's a divergence, these are the levels we want to buy. We want to buy that divergence. Or if the 200 period moving average is coming down here and you have a divergence, you want to buy that. That's a better divergence. Pivot area. So certain levels you want to combine with the stochastic rotation. I added that to the and they're called divergence, or what I call rules of the trade, but on divergence and where to take it off. So this is pretty simple. A regular divergence with nothing really around is 1-star divergence. 2-star divergence, and here's optional indicators that we look for. A 2-star divergence is a regular divergence, which is required for all setups. And then having any of the 2 of the 3 following: a reversal candle, or a trend line, channel line bounce, or a time of day. And time of day is also important because, we find a lot of these divergences work great to identify the tops and bottoms of the day. And these sometimes come in around 9:50 to 10. We would say 9:50 to 10:30. That time frame, we can start to see divergences play out there. They're usually really good for big moves. Lots of times we see divergences at the end of the day also. So if it shows up in these times, we tend to put a little bit more into those divergences. And then my favorite one, the 3-star divergence, is a divergence with 3 of the 4 indicators line up. I'd like to have that reversal candle. Then we place our stop underneath that. It should be on a trend line or a channel line or a VWAP. And the 5-minute stochastics, and that could be 200 period moving average, could be on here too. The 5-minute stochastics have to be setting up in the direction of the divergence. So if it's a buy-side divergence, the 5-minute stochastics, which represent the 60 period on the 1-minute chart of the stochastics, and that might be complicated if you're not familiar with all these terms. Just reach out and ask me. I can teach you, no problem. The 5-minute stochastic rotation has to be in favor of you. It has to be turning up on the buy side. That gives you a great opportunity for a longer term trade. And again, time of day always helps. And then if you have a 3-star divergence, you want to take a bigger position. This is giving you just an example of saying, all right, you could use this as an example. Maybe you only want to take 2 contracts of the ES or MES or the NQ on a 1-star divergence. On a 2-star, maybe you're taking 3. On a 3-star divergence, you're taking 5. You want to rotate out on your first rotation. So whenever we have divergences, if I show you a good divergence here, here was one. You want to take it off on the first rotation. So the first rotation back up to 80 here is right about here, that trend line. So you're your first exit would be here, all right, or right up against, right in this area. Right when you start to tag that, you're usually right into that zone. Remember, you're buying down here, so it's giving you a nice little pop, and that just deals with the pullback phase of this. I mean, it still could be a long-term hold. That you're going to determine by your bigger time frames. Also your time of day and other things. Now this is overnight. 6 o'clock just opened up, so that's kind of market just dropped here. We might have to go to work. Might have to go to work here. Live action. Back here there was a divergence, but yeah, that's what that's why I broke those down a little bit more to make it a little easier to to put you in an original stop is placed on the second stage divergence low. So after you take out that first rotate first off, then you want to move your stop up to break even. You just manually move your line up to break even, depending on what platform. You should be trading on a chart too. But you could just move whatever your DOM and have it follow it up, and again, follow it up. So that's it. You also have to decide how you're going to trade this. I recommend trading the micros. It's just, and these are different micros you could be trading. The MES, which is the micro E-mini. You have the M2K, which is the Russell, the NASDAQ, and the Dow. Each point gives you $5 per point, $2 per point on the NASDAQ. M stands for micro. ES, 2K, Russell 2000, NQ, YM. So the M stands for micro. Again, the YM only 50 cents per point. Not much there. Kind of. And yeah, that's where I'm going to leave it. But again, I'll be really getting more in detail. All these videos are going to be put into the members forum under a certain section, so it's really going to be detailed. And that's about it right now. I want to get this out for you. Market's dropping off hard. Let's go to the market right now. Just dropped off. I don't know if we had any. We probably, this time of the day, we do have Asian news usually coming out of Asia. Let's see if anything is hitting the wire right now. We have a Senator Reid, rest in peace. Senator Reid, the former Senate Majority Leader and Nevada's longest-serving member of Congress, has just died, 82. That wouldn't be sending the market down, would it? Market's getting hammered here. What I was going to show you before, and I'll leave you off with this video because you don't have enough time to review everything. Go to Forex Factory, Forex Factory, and whatever happened, it just came out about 8:30, 4 minutes ago. So it's probably, let's see where we are on our calendar. This is a great calendar to have. Ooh, what did I do? I messed it up. All right, so yeah, there's nothing really out here right now. Next thing here, Credit Suisse, nothing overnight. So it's a good calendar for overnight. See what else I can find out there fast. All right. Well, you know what? Whatever it is, if you have some profits on that, I would take it. I don't want to do right now because I was a little short, so I'm taking that off. All right, so we're going to send this video on its way, 20 minutes. Don't forget, tune in each day, DayTraderRadio.com. I'll do the live trading if you're interested in this type of trading. definitely stop by DayTraderRadio.com. 8 a.m. to 4 p.m. and later. It's almost 9 o'clock tonight, and I'm trading. Bye bye.